Hi, everybody. Welcome. Today, we're going to talk about smart real estate investing in a shifting market. Are you ready? Because it's happening. Even if you've never invested before, and you maybe aren't sure why, or if you already have a portfolio, but you want to grow faster, opportunity is coming. So let's see, there's a bunch of people still joining. And what I want to just say is, hey, thanks for coming. Welcome. And I just want to say hi and tell you that we broadcast live every month with expert speakers that are active in real estate investing. And you can ask questions and participate from anywhere. And there's people from all over the US on here. And it's live. So the truth is, you don't need a ton of money or knowledge to get started as a real estate investor. You just need to know the right formulas and follow a system to be a smart investor. So today, I'm actually going to be the speaker and the expert. And the truth is, I'm kind of a data geek. I believe that smart investing is accomplished when you know a good deal from a bad deal. And it's about the market knowledge. What's your personal investing strategy? It's about being educated and knowing how and when to execute given the proper data. There's always good deals out there. They're right on the MLS. I recently heard an investor speak, and she had bought the last 40 flip deals right off the MLS. She was a realtor. They're there, but you have to know what you're looking for, and you have to understand the market. And that's what we're going to talk about today is to the best of what I can say today, how can we predict? Oh, there's my Fitbit going off. Okay. Let's see, I'm going to share my research and my personal opinions that I've derived, having been through several downturns myself and studying what's going on today. Just a second here, I got a technical issue. Wonder what happened there. It's my speaker from last month. Just a second, I got to change something. Lynn, I'm gonna kick you off and you might have to sign back in because I got to remove you as a panelist. Okay. Oops. All right. There we go. Sorry about that. You know, here's the thing. It's COVID-19. I'm left all by myself here handling all technology for this webinar, just one person. So usually I have help. So please bear with me. Okay, now, again, this is my personal opinions from all the data I've derived, and I have a set of gurus that I pay attention to, so I'll be using a lot of information from, believe me, a ton of webinars I've done in the last 2 weeks. So the other thing today that I'm going to talk about, I'm going to use slides, and then after that, I'll come back on because I have data to share. And we're going to talk about what's happening in the real estate market around COVID-19. Then we're going to talk about the jobs and the stimulus package because that's weaved in. We'll talk about the housing market, landlords, and what to do around your tenants. We're going to say a little bit about mortgage and lending, and then how to get out of the panic triangle. And I just want to say, just from my heart, everybody, I hope that you're safe and your families are well. So first, a couple of logistics. If you want to ask a question, you're going to use the chat box. So make sure you turn on or have your chat box activated to the right-hand side. And that's where I'm going to look for the questions, okay? And that will be a little later though. So just as a test, you know, put your name in there and then I can see who you are. And I see Annie put her name in, and Paul, hi Paul, you're here. And that's just to make sure you know how to use the chat box. And I'm going to try to answer all your questions, but it'll be at the end, okay? And then the other thing is, before we get started, I'm going to take a poll. So I'm going to put the poll up right now. And I just want you to fill out right there where you fit in real estate investing. And that's so I know who I'm talking to. So just take a second and make a vote. And then I'll put up the overview of who we have here on this call. Looks like we got some just getting started folks. Oh, it keeps changing. We got realtors. We got a good array of people here. Somebody in every single category. We already got a question. How much do you think one should leverage themselves when investing in real estate? Anybody who knows me, I don't believe in over leveraging. I like to be safe. And so, you know, I like to hold a portfolio at 75% loan to value or equity in it. I might buy at a different position and add value, but that's what I feel safe at. Okay, I'm going to end the poll here, and then I'm going to share the results here. Actually, the winner was just getting started. And then buy and holders and fix and flippers. Got a little wholesaling, house hacking, burr, and even realtors on here. Okay, great. That helps me see who's here. And usually it is these categories, but there's a lot of people want to get started. And if any of you who are already in the business, it's confusing. Okay, I took the poll down. Good to see you guys. All right, and now I'm going to go over to my slides. So give me a second to switch. Okay, can you see the slides? I think so. One of my people text me, one of my folks, so I can make sure we're good. Abby, that's my helper, Abby and Jeannie. Yep, they can. Okay, so here we go. Now I got to figure out how to move the slide. Nope, that didn't do it. Here we go. We're off and running. So I'm LeAnn Riley, and I am a broker and a real estate expert who helps clients buy and sell and invest. And I lead the Encore investment team of realtors here in the Twin Cities, Minnesota. I'm with Realty Group, and they're the fastest growing brokerage in Minnesota with over 500 agents. And I just have to mention one more thing. I am the grand prize winner last year of the BMW convertible from my brokerage. So thanks, Archie. And I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties here in the Twin Cities, Minnesota, and actually several other states. I like South Carolina, vacation properties, and Alabama, I had some properties, several other states. As a national coach and trainer, I teach my proven profit formula across the United States. I help you get started as an investor, choose a strategy and location, and acquire properties. And I'm so glad you're here with us tonight. So let's start with my housing opportunity grid. And these are the elements of a housing market. We have landlords, jobs, the economy, housing, mortgage lending, and now I added the panic triangle, which would be COVID, health related, and all of that equals opportunity. So the question is, and why you're here, is the market shifting. Everything's shifting. Our whole lives are really turned upside down right now. And so what's happening in housing? Well, there's a downturn coming for sure, right? It's a yes. But what I want you to see from this slide is it's not 2008. Today's market conditions are different. In 2008, you can actually see we start way back in 1980. There was a recession of sorts, 81, 91, 01, and then look at 08, what happened? Youch, right? But it was different because we had subprime rates, home prices were appreciated, we had a surplus of inventory, and people who owned houses were highly leveraged on equity. And none of those factors are in play today. And so that makes it uniquely different. Today, people have more equity in their housing. There's low inventory today, not a surplus. And the mortgage rates are at a record low. So that's a lot of different factors, right? Again, also, it's going to be different than the Great Recession. This is a global health issue. The 2008 was caused by a housing problem. So what's the bottom line? The housing market is challenged. There's no doubt about it. But what's different is there's help for those who have lost their jobs. There's the stimulus package. I'll talk a little about that later, and the CARES Act. And what they're predicting is it should be a quick recovery for the economy after this health crisis. Now, here's the thing. We don't know. Right now, we don't know. We are in uncertain times. If the crisis is 60 days, then the rebound will be faster. If the crisis is 90, it's going to take a little longer. We don't know the answer to this yet. I did want to say for anybody watching this, it's April 8th, 2020, because in 2 weeks, things could be different, but this is what I know today. Here's the thing. People always need housing, and what's likely to happen is a deep V. That's what's going to happen. It's going to go down fast, and it's going to come back up fast. That's a lot different. This is more like a hurricane. It's going to be over quickly. In 2008, it was more like a U. It stayed down longer, trailed a little, and then went back up a little slower. This is going to be a V. You'll hear people talking about that. I want to share with you what categories I've heard about. Safer categories are 1 to 4 unit single family or smaller multifamily projects. I've listened to a lot of webinars by multifamily syndicators and the bigger multifamily properties, and there's just a lot more that can go wrong, and you're in public communities, more density than in the single family market or the small multifamily. The big thing to buy if you're up there in the commercial storage facilities are really a big thing to go after right now. And larger multifamily, it's safer in the B class. Then a lot of people maybe were buying C and improving to B, but B is a little safer right now. I'm talking about neighborhoods when I say A, B, C, D. The thing about real estate are data lags. Like, we don't know what happened, last week. We don't have that data this quick. We usually are a month behind in our data. What the prediction is, you can start to look for bargains in Q3, and Q4, it'll be strengthening. So here's what you want to do, like right now, look for those bargains, and maybe, especially if you're going for the bigger stuff, get it under contract to get controlling interest, and then maybe have a longer due diligence period, and a lot more factors around occupancy rates and things like that. And that way you got it under contract, you tie it up, and then you wait this out a little. That's one thing. I think in the smaller properties, you're not going to see that. You can really find some decent deals right now. So one of my mentors says, get the controlling interest, then mitigate, and then you can decide to dodge or go. Makes sense, right? 2 weeks, 3 weeks, a month and a half down the road, you might be able to get a price reduction. Who knows? If if it's a good deal, though, it's a good deal. Then you go ahead. People lost out in 08 waiting for it to get better. And some people kept waiting for, I don't want to, I'm scared. So they waited, and pretty soon the prices rose, and that wasn't right either. Buy in population growth areas. If you're looking nationally, you might say Memphis, Houston, Phoenix. Think about that even on a smaller scale, though, if you're a local investor here in the Twin Cities. Where's the population growth areas? Here's the thing about housing. It's the 5th in US GDP, gross domestic product. That is critical to the well-being of our broader economy. I think I heard I don't remember the statistic of what percentage of the market it is, but it's high, 5th. So here we are, we're in uncertain times, right? Anybody feel like this guy? We don't know what's going on, right? So really what you need to look at right now is really you have to face that uncertainty personally. We need to get comfortable in uncertainty. We always lived in it anyway. We just would ignore it. Now we can't ignore it. Now it's right here staring us in the face. We don't know what's going to happen. So really what you want to look at is how can you change your revenue plan, and what can you do to shore up the business that you already have? And I'm sure that's what restaurants and some of these businesses that are forced to close, they're looking at, oh my gosh, can I afford to open? How do I shore up my plan? Now that we're at home or sheltered, this is when you work on your business, things like this, the plan, okay? Because now is the time to make a plan for success. Let's see, where am I here? All right, caught up. You've heard this, you guys, cash is king. So one of the things of the stimulus package is you can take 401k money out now without penalties if you're diagnosed with COVID or adverse financial hardship. That could be an opportunity to get a hold of some cash. Right now, you want to pull in the cash because then you'll be ready for purchasing. The Stimulus Act, that's a way that we can access capital. So you need to pay attention, and I'll talk a little bit about, you should get as much capital you need through the end of the July. And it can be simple things. Like one of the things I did is I took a look at my credit cards. I pay all my balances. I don't have any credit card debt, but I still called them up and I raised my credit limits just in case. Not that I need it today, but that's just a way for me to have access to more cash right now while I can. And then they'll be up there. So get a hold of the capital you need through the end of the July. And there's 2 parts to the Stimulus Act, the EIDL, that's the Economic Injury Disaster Loan. And there you can get $10,000. Pretty, you just have to apply. It's pretty basic. Anybody can pretty much have it if you meet the qualifications. And that $10,000 can be forgiven if it goes toward payroll or rent or mortgage payments in the name of the business. And you can apply for more than $10,000. I heard a guy who he made an application for $280,000 on Friday, and he got his check on Saturday. That was last weekend. That's pretty amazing, isn't it? You need to work with a bank that is SBA 7A approved to take care of that kind of business. So one of the things for me right away, I keep my money in a bank that is real estate friendly. That's important to anybody who's an investor. Might even want to split it between 2 banks, and they are SBA bank. That's good to know. Doesn't hurt that I know the president of the bank either, and I can call him, and I did. So, and the other one is the PPP, Paycheck Protection Program. If you're still working, it helps cover payroll costs. It may be forgiven if you maintain jobs on your taxes, and you have to spend over an 8-week period, the funds you get there, and it's a formula 2.5 times the payroll. But this doesn't count for 1099 people, and I'm a realtor. I can speak for that. I'm a 1099 person. I run my business paying people as 1099s, subcontractors. On these SBA loans, the banker is calling the shots. So you need to go to your banker. And I just heard this yesterday, one of the big banks, I don't like to name names, they ran out of their allocation of money already. I mean, it's kind of the Wild West, these stimulus packages, and the rules are changing every day. I don't know, I bet you I attended 5 webinars with all the details to even figure out what I should apply for. So you need to get proper information, and if you have a good SBA partner, they'll help you. The point here is you need access to cash. Another thing you might look at is if you have a HELOC, that'd be a line of credit on your home, let's say, you would want to, one large investor, you pull the funds now, take out your HELOC and put it in a different bank or a different account. One guy was putting it with his mother. Pull the funds while you can. You can always put them back a couple months later should something change and you don't need it. But you might not be able to pull it out in 2 months. That's opportunity money, okay? And where's the opportunity? It might be in the stock market, it might be in real estate. It's where you see recovery. Your stimulus money is based on your last tax return. That is some automatic money that's coming out to everybody. $1,200 if you're single and you made $75,000 or less. $2,400, sorry, for a couple if you made $150 or less. I did find out one little snafu on that, even for, like, I was looking for my children. You need to have direct deposit set up with the U.S. Treasury. Like, if you did your tax returns, do you get direct deposit? If you have direct deposit, when they do dole out that money, which is supposed to be in April, you'll get your check. If you don't, I heard that you might not get it till September. So if you don't have it, you can go online and sign up. So that was a new one for me to check into. And then there's the CARES Act, which is part of this detailing, and that is interesting because that has to do with net operating losses, that they can be carried back now for 5 years. And that real estate professionals, that works for them, and short-term rental people. If they're done right with an S Corp, et cetera, they're taking a big hit right now, short-term rentals. Nobody's traveling, right? They're empty. Some of the people who are in the short-term business, they're renting things out now for a year just to make sure if they have too many. And there's cost segregation, and what's exciting is I'm doing a webinar next week on April 15th on cost segregation. And I have a national leader in that process next week. So if you want to look back and save some money and you own real estate, there may be an opportunity here. You can carry back 5 years with non-passive losses. All right, so cash is king. I'm going to talk about 4 other areas that affect housing. Landlords. Let's talk about, some of you folks are landlords. Everybody has the same interest here. Landlords need to get their money. And I heard a stat yesterday from Renters Warehouse. This is really good news. Now that April 1st came and it's 8 days into April, he said they managed 22,000 rentals across the US, and 83% of the tenants paid their rent. And he thinks it'll end at about 93 to 94%. Typical month is 97%, not too bad. Less worried now about strategic delinquency, people just not paying because they could get away with it. And there is another trend they noticed, though. Less people are moving. Applications for moving are down. I'm not surprised about that. We're at shelter in place. Really what you need to do if you're a landlord right now is cooperate with your tenants. Tenants in Class C properties are that average person only has $400 in the bank. A B class property, that average person has $2,000 in the bank. That doesn't go very far paying your rent if you lost your jobs. The lower the income, they're going to get hit harder unless they're government subsidized like Section 8, and that money's going to come in the mail. So you got to work together. The other thing, like in Minnesota here, we have eviction in place orders. You can give someone notice, but if they don't feel like moving, they don't have to. So even if their lease is up or whatever and they haven't paid, you're stuck with them. So that's a bit of an issue. Again, be empathetic and try to work with people. Another thing to be careful of, there might be some lawsuits around this. If you're a landlord, especially in a bigger building, you better be darn proactive about cleaning, and think about, even in a smaller building, your laundry areas. Put up a sign in there about your practices and what people should do, how they supposed to all do laundry together and not be spreading germs. Laundry in public areas are the landlord's responsibility. If a tenant isn't paying, get proof why they're not paying, and work out a plan. Get it in writing. They're going to pay half now and half whenever, and make that so that everybody knows what the plan is. And also be kind. Supply your tenants information about how to apply for unemployment, or maybe there's social service agencies that can help pay the rent. So check that out. Now, what's going on in mortgage and lending? I did a webinar with some leaders yesterday. They're worried about forbearance. Here's my caution: pay your mortgage if you can. My son just moved into a house 3 weeks ago. First mortgage, he was on his second or third because he did a rehab, but he's panicking. He got laid off. How's he going to pay the mortgage? But if you can, you pay that mortgage, because what people don't realize, some forbearances mean that in 90 days, you got to pay all 3 payments. And that's how we're going to see foreclosure happen. People won't realize that 90 days will come. They don't have all the money, and boom, down the foreclosure trail they go. It's very hard to catch up. Another thing I found out, really shocked you guys, Minnesota has the highest credit scores in the nation. Wow. Credit requirements are changing according to my mortgage partners. You need to have higher scores, 640 and above, even down on the lower end. And as an investor, I heard somebody say, I think a guy told me today, 720 and up. You got to have sharp credit. And that forbearance thing might nick your credit too, even though they say it won't. I looked at a letter, and in the letter, it didn't say it won't. It said it would. So if you're buying a house right now and you're looking at mortgage rates, lock your rates. Lock it if you got it, is what the mortgage guy said. There's so many moving parts. They're getting new rates and new things every day. So if you get something decent, I heard of an investor closing a deal here in a couple weeks, and he got 3.87, I think he said, on an investment property. But they were kind of 25% down, which is standard. They were hitting him with some extra fees. That's the price of doing business today, and we're going to see more of that. So get ready for a little bit more cash out of your pocket. Down payment assistance is still around and stable. It went awry for 1 or 2 days, but then they reinstated it. Lenders are more worried now about repayment, especially with this forbearance, and they're worried. So they're looking for a higher reserve from investors. Then I heard from some people, FHA, they're worried about lack of performance. So they're going to use a higher debt to income ratio, and they're worried about lower scores. They're shying away from the low creditor. You know why? They transfer that loan to a warehouse bank, and they're worried about the warehouse bank charging overlays to higher credit, and then the lender will be left holding the bag. So you got to work with strong lenders. Here's good news. The rates are going to stay down for 18 to 24 months. Yay, right? Really low rates. Refis are slowing down, could just be the shelter in place. And where you're going to see some damage is the jumbo market is getting tighter. Your second mortgages are even harder. They're just going to pull back a little, these lenders. 20% down may go up to as high as 30% down in jumbo loans. They're probably going to see a shift in the luxury market right now, or you're going to see more inventory. They're going to take the hit first. They're going to, let's say a loan is in process, they're going to really be tight about verifications of employment. They need a verbal verification from the employer 5 days before closing. It used to be a week or two. And then when people lose their job and get rehired, there are going to be new stipulations. You might need to be back to work for at least 30 days before you could just get one paycheck and get a new mortgage. All right, let's see. Oh, good news in the appraiser, how they've handled COVID is there's desktop appraisals going on now. They don't even drive by. Isn't that amazing? But I know in my realtor business, I've heard of some appraisals coming in low. They're conservative. That can hurt if you're the seller and you already got the higher price and the appraiser comes in low. And if you have that forbearance on your record, even if you did everything correctly and you want to buy a new house, that can affect it. So that's why I say pay your mortgage if you can. And if you're having trouble, communicate with the lender. If your hours get cut at work or whatever, communicate. It makes a difference. Next, we're going to move on to the realtor category. What are we doing different? In Minnesota, realtors were deemed essential. So I wouldn't call it business as usual at all. We're ready. We're used to working virtually. I've worked at home for 20 years. You now have virtual walkthroughs. If you're looking at a piece of property on the MLS, you can probably do a virtual walkthrough. We are practicing safe and responsible COVID protocols. We have addendums now that have COVID language in them. We need proof of funds before showings. We're not going to looky-loo with people. We need to know they're super serious if we're going to go. Some realtors are choosing not to go on showings. Like I wouldn't go, but I would have somebody take care of you. That is out there. Let's see here. Hey, here's a really exciting thing. I got 3 calls this morning of people wanting to list their property. 3 calls. 2 of them were investment property. That's a good sign right there. They're concerned. They want to list it now before it dips. Let's see, multiple offers are still happening. Here's the issue. If you are trying to buy something right now, you better, they're not looking at the price always. It's the viability of will it close. As a realtor, we're calling the lender. We want to know personally a little bit more information, or at least make that connection, because that's where the deal falls apart. You need a realtor who works closely with mortgage people, because then we can really be up to date. If we're using an online lender, we don't know who we're talking to. If we're using our regular guy who we know can help, that makes a big difference. There's changing rules and rates every day. You got to have a clean offer right now. Don't have a lot of contingencies. Those are deal killers. There's still an inventory shortage. We all know that, even on the lower end. Higher end, I've seen a lot of price cuts. There's opportunity in real estate and business. Cash is king. The opportunities are going to start in Q3 and Q4. So get your business plan together. Sales are coming. The other thing we're doing is Matterport photography. That's where you can look in the corners with that and practically see amounts. I think that takes care of the, oh, one other thing I saw drop out, the iBuyers dropped out of the market, the Zillow buying homes, all those, that dropped out in the last, like 2 weeks ago, they all went down. Let's talk a little bit about jobs. 10 million Americans lost their job over the last 2 weeks. Predictions are up to 15% unemployment in Q3. There's a health crisis that's brought the economy to a screeching halt. And you know what? Many people are feeling the personal crisis. You know, both of my children lost their jobs. They're feeling it, but thank goodness to unemployment. That's what's uniquely different this time. There's a way to crawl out of this. This is a planned, organized, partial shutdown of the U.S. economy with a stimulus package and the CARES Act, with the idea, the goal to keep everyone, households and businesses whole. That's hard to say right now because there's businesses crashing by the minute. And anybody who's not experienced that real estate's probably running right now. Us who've been through the downturns, we get it. You know, I owned a lot of real estate personally and built my portfolio, but I did not become a licensed realtor till 2007, right in the worst time to become a realtor. So let me help you out. And just, I got to tell you, you can schedule a free strategy session to chat with me on the phone about real estate and how there's a long link there, or go to just my website and you'll be able to find a way to schedule. I want to conclude today with this graphic. I belong to a coaching group, and I thought this was just really helpful because a lot of people are living in panic right now, and that's certainly not helping anything. And what we need to do personally with our mindset is move from panic to possibility. And how do you do that? Just you people who are attending this meeting, information helps me resolve my concerns, not over information. If I'm watching I'm not a news junkie, and I'm a positive person thanks to my mom and dad. They raised a family with 8 kids, and we're all entrepreneurs because they just taught us we could create our own opportunities, and whether the market's up or down, I just know that inherently, so I'm blessed. But there's a certain thing you need to do. If you're feeling panic, get some help, get some support from someone. And how do you do that? I like this graphic that my friend Patty developed. Get connected with someone that, you know, use your connections and take some sort of focused action. And I'm not saying make a miracle. It can be as small as taking a walk or doing some exercise, drinking some water, getting off the couch, something. And what that will do is bring you to possibility. And that's where you can actually work on your mindset, your vision, and your goals. So we need to adjust to a new normal. I don't know what it's going to look like, but guess what? You know, you get to create your new world and a new you. So I'm hoping that I can help with this kind of information. You know, I just say be ready for opportunity and appreciate family and each other, because innovation is happening in our economy and our world. And I always want to say, stay safe. Now, I want to tell you about that next meeting, just so you can write that down or think of it. It's actually next Wednesday, tax day. And this is where I'm bringing in Craig Wanamaker and Warren Dazio. And they both are from Cost Segregation Services. And they're going to talk about how you can use this to get cash in your pocket, money you may have already paid in taxes, by understanding how cost segregation works on your real estate and properties. And what I love is Craig talked about his son has a duplex, and he figured out how to do it even on this duplex. So, okay, now I'm coming back over. I'm going to turn off my screen here. And I am back. Now, Where's my chat box? Let's see what we got. Okay, I see a question here. Isn't HELOC a line of credit? Are you saying that can be used as cash? Yes, it is a line of credit, but you can take it out lots of times. Take out the cash, take out, you've got it financed for maybe it's $50,000. Go ahead and take it and move it to a different bank, because banks, if it's a line of credit, sometimes they change their rules. I've heard of that before, and all of a sudden it's not as available as it was, because you may have generated that a year ago and oops, the rules changed. So, just discuss it with your banker, but that's what a lot of people are doing. They're actually taking out a bigger line as much as they can, and then you move that somewhere else, and you can pay it back in 6 months if you don't use it to buy even a better opportunity. Okay, when do you think the dip is going to come? Like I said, it depends on the timing of when the health crisis is over and, the shelter in place is done and people can get back to work. But it's not going to be instantaneous, because small businesses particularly, and I just can so relate because I'm a small business owner and I've owned other small businesses, and boy, you get off the formula, or takes a lot of these little restaurants that have closed. They won't be able to afford the rent and go back. They can't. They maybe were already operating on a shoestring, and now they may change their mind too. That's what I noticed. The people who were calling me to sell their house, just the 3 that I talked to, one was an investor and something went wrong with the tenant. He was going to sell anyway, so why not sell now? Rather than next spring. Somebody else, they're close to retirement and they're like, okay, let's sell now and buy something else. So people are starting to narrow down their wants and needs. This sheltering time has gotten people to get real. Okay, if you were going to buy an investment property, would you wait until the foreclosures come? I'd start looking now, because I've already seen, in the Twin Cities, for example, you couldn't find a multifamily 10 to 20 unit there. It was so overpriced, and there was nothing out there. In the last 2-3 weeks, I've seen 5 to 10 of them, boom, coming out there. So people who need cash, and if they're maybe leveraged high, like somebody asked me early on, they might be saying, oh, time to get out of this one. So you might see that. Can you get an EID loan to buy a multifamily property? No, it has to be used on business expenses, not to purchase something. That wouldn't that be great, huh? And then get it forgiven? No. It's got to be a pattern you've already had, and then you use it for that. They're handled directly by the SBA. Incidentally, I applied for that one. It's only a 2-page application, and the main thing I applied for it the day it came out, I have a number now, so I'm in line, because it's not fully developed or like happening quite yet, and it's not complex like the PPP. Are people selling investment properties because they're short of cash? Yeah, that's what some people are over leveraged, and they're gonna sell, or maybe here's the other thing you're gonna see. Someone who owns an apartment building or even a duplex or whatever, and you've owned it for 10 years, it's depreciated. So sell it and get a different one. You'll see a lot of that action going on. If you have multiple LLCs, do you know if the SBA is limiting EIDL loans per LLC? Actually, no. Let me look at my little rules on that one. I got rules. Let's see. No, I have heard of some businesses, each LLC has been applying, but I would check with your CPA on that, or the SBA person. Make a contact with an exact one here, and hopefully through your bank you'll have one. Just FYI, I heard a lady today, Bremer Bank, not even a customer there, walked them right through it, boom. I know I missed somebody up there. Okay, here comes one. They're just saying thank you. I missed some way up there, but my chat is rolling, so I can't go back and look. So go ahead and put your questions in. I'm caught up. Somebody must want to know something. All right, what else do I know? Let me think here in real estate. Maybe I will look up your question, Renee. Oh, here we go. What percent of the value of the property should you have on hand to account for repairs? All right, I would say that, I don't know if I would use it a percent, although the older the building, probably the more percent. Say you bought something that had, was built in 1920, you probably need more repair money on hand than something that has a brand new furnace and a new roof. So you kind of go according to age on that one. And also, are we talking multifamily, or are we just a single family house that you're renting out? Or, yeah, again, scale it, I don't put a lot. If you're holding turnkey rentals, and say you are buying in C-class neighborhoods, that'd be more the inner city, you don't have to fix them up that good. You just have to have clean and adequate housing, and other than the furnace going out, like I said, or the roof, or maybe the siding, and then the tenant turns. That should be all kind of standard formula, but you don't have to fix them that good. On the other hand, I remember one building I had to replace the sewer line to the street. Although technology has helped us there, they have those balloon things that go in there now. It's amazing how much money you can save compared to the old days. That's said from someone who's had them for a while. What type of properties are coming available? I'm seeing everything. I got a list of 40 off-market properties yesterday, and there was multifamily, single family, Edina fix and flips, everything on there. So I'm seeing pretty much everything. Like I said, and here's the other thing. There's going to be personal disasters, and there already is for people. And I really can speak to this from my own experience. And, somebody's going to die, and then there's mom and dad's house that you have to get rid of. Things like that are going to happen, and there will be deals, like I say. And I can speak from personal experience. Life happens. And I read somewhere that just couples being cooped up together, there's going to be a higher divorce rate. There's going to be babies born. See, it goes either way. It's interesting. Someone I know has room for rent, and the volume of inquiries is amazing. And there's desperate people right now moving. Situations, families are having trouble. There's domestic abuse is on the rise. There's a lot of social issues going on when people suddenly can't run from, some people live running from whatever their life situation is, and now they have to face it. And so we're going to see that. I want to speak from personal experience. I don't know if you folks know my story, but I started buying real estate in the 80s, and I was divorced from my childhood sweetheart, and I was living with roommates and was complaining to my older brother. And he owned real estate, and he said, buy a duplex, and then you can live in one half and the other side will pay for it. And I went, what? And he showed me how, and he helped me get my first triplex in Columbia Heights. And in fact, those other 2 apartments did pay for my housing, and I wasn't very good at repairs. And I was dating a guy, and he was a handyman. Make the long story short, I married the handyman. And it was actually he and I Philip is his name. He and I built a $14 million portfolio here in the inner city, buying condemned duplexes and fourplexes, rehabbing them, and then holding them, buying and holding them. And actually, I had 4 people that ran that portfolio, and we built it up, and we were living off passive income. And unfortunately, personal tragedy hit our marriage, and it was alcoholism that took us down. And I ended up being set for life, and then I wasn't. And I ended up flat broke after all the attorneys, and I ended up with full custody of the 2 children, and they were 9 and 11. And you know what? And this is going to happen to people, you guys, in this pandemic. My head was in the sand, and I could barely operate. I luckily had a really great property manager, and she helped me hold up the portfolio while all that was happening. Took 4 years to get divorced, and I ended up broke. And what I want you guys to get from that story is I started over, and I was already in my 50s. And I use all those lessons that I learned to help teach you guys how to invest in real estate. And that's the way that I can give back, and that's the way I rebuilt myself. And it follows that pyramid I showed you. I went from panic to possibility, and I live my life like that. Done a lot of personal transformation and coaching, and that's what, you know, makes me who I am today. And that's why you see me on video in my studio here. And I share this with people so I can help them. And that's where, you know, I get to follow my passion. That's what it's all about. Yeah, I made a video, you guys, I'll put it out tomorrow, what it's like to live alone in shelter in place. And, you know, I got a lot of time to think. So it's kind of a funny one. All right, I'm going back to the questions. I see that the first 10,000 EIDL loan is grant, even if it's not really a grant, it's a loan, unless you follow the guidelines and provide the proper paperwork that you did use it, in fact, on business expenses, payroll, rents, whatever their guidelines are, then it could be granted. Otherwise, it is a normal loan. If you take, so just know that there's guidelines. You can take more than 10,000 on an EIDL loan, but the first 10,000 will be granted if it works. Thanks, Matt. Somebody says, way to go. That must have been from my story. Oh, Renee's saying, if you take it as an advance, you just have to follow the EIDL rules. But if you own a lot of different real estate in a lot of different LLCs, work with your accountant, because I went on a webinar with a guy who was a lawyer and an accountant. What a great combo. And he really was useful in there. If you have an S Corp, there is really ways to, I don't know if I want to say take advantage, or there's ways to prosper if we use these tools that are given us. And, you know, smart investors do that. We use 1031 tax exchanges as real estate investors. We use trusts. There's ways to pass your wealth forward in families and, you know, in businesses, if you're smart about tax rules and things. That's why I'm doing the cost segregation seminar. I figure, hey, I barely understand it. I would love to talk to people who can really explain it. And if you can actually make it work on a duplex, wow. You know, if I can help you guys figure out how to make money, I'm in. Okay, anybody else? We got 6 minutes left. So I'm here to chat real estate. That's my game. Okay. Oh, another note, any ideas on how to post to Facebook Marketplace such that you do not use your personal Facebook account? Yes, I do. I saw someone, you know, it's pretty easy to set up another Facebook account. You could make a Facebook, just make another one with a half of your name or whatever. And then you're not on your personal account. Facebook Marketplace is the place right now for rentals. Make one called one of your LLCs or whatever. That's an easy way, but that's where it's my son actually who has the room for rent. Now, we got some guidelines on that. We don't really, he doesn't really want a renter right now. He's in quarantine. In fact, I'm gifted because I do live alone, but the two people that I get to see is my son and my grandbaby, because they were living with me 3 weeks ago so almost 4 weeks now for me in quarantine. I chose that personally because of my age. I'm healthy, luckily, but it's just what I chose. So I don't stay lonely though, because I can go over to his house and he can come over to my house. That really helps. And I can go for a cruise in that BMW. I put the top down yesterday. For those in Minnesota, you'll get it. Okay, who else? Anything else? Oh, where's I missed that one. Where's the information on the EIDL. Wait a second. If you friend me on Facebook, I guess I will say that thing. On Facebook, I run a group called LeAnn Riley's Real Estate Investing Club. And I have posted on there that whole hour. It's posted by Gary. Thank you, Gary Keeker. That whole 2.5 hour webinar where they explain the PPP and the EIDL. That thing, the link is posted right under the LeAnn Riley's Real Estate Investing Club. So join that. It's free. Just find me on Facebook. And then you can look up the exact link and the details. Okay, Laurel says, you still buy rentals? If so, what types of opportunities are you targeting for myself? Personally, I do not, and that's only because I've developed my real estate business where I run the team. Running a team is passive income, guys. That's why I do it. I teach and train. And then I have my online real estate business, and I can make more money over there than buying and holding property. How about that? But yes, I sell a lot of rentals, and I totally believe I love the single family to that fourplex category. Love, love, love it. And then up to the 20 unit building, that's just a really safe category. I was talking to some people, clients, my prodigy clients, and yeah, they have up to 20 units or whatever, anywhere in there, and lots of duplex and fourplex. And, I think she said all but 2 people paid the rent. That's Minnesota nice too, but I'm really happy to hear, even in the larger circles, a lot of people paid their rent. Everybody was really worried. And that's what the stimulus is about. With the unemployment money, people should be able to continue to pay the rent. And just so you know, if you are a landlord and own a bunch of things, you can get some help there too. So that's the whole idea why this is going to be a V and shoot back up, because it's not going to just crash at the bottom. We have help. Okay. Ken says, awesome. All right, we got one last question if anybody has any. And thank you so much for trusting me and listening. Actually, there is something in the Q&A. Let me see. How do you find the deals? There you go. I'll end with that one. Like I said, there is deals on the MLS. And the other thing, and I have a whole webinar about this on my YouTube channel, you need the right realtor. You need someone who's connected and been around, because even though there's rules now about you cannot market off-market properties the way you used to. I see a big change going on there. MLS rules prohibit it. You can market off-market properties between your own brokerage, but not like on Facebook Marketplace. There's going to be a lot less deals out there. So it's who you know. It really is. And being in the business for a long time, you know a lot of people. And so I do broker a lot of wholesale deals, and I just know of deals, and I know of people who want to buy, and I'm the conduit. And that's another way, that's an easy way for me to do real estate. I'm blessed. That's why I do this, you guys. Share my information. That's what it's all about. So thank you so much for joining. What do I want to say? Be sure and join the real estate club. And if you got registered here, you have joined something. And thanks for joining us. And then remember, next Wednesday, I'll be live again. So thank you so much. Love you guys. Bye.